Good morning. A little bit late going here. Let's get a move on. I'm thinking this market's going to run out of gas, short term anyway, today. I don't think it's going to continue to move higher as it did. Always- Um, I don't know. I just think, it's Friday. Um, really not much of a gap up. Kind of up there, but anyway, starting with the futures here, and this doesn't relate to SPX, but I think these are the areas, well, even the numbers will relate to SPX for spreads today. You got the support area down here between, 37, 40, 50 area. So anywhere and the lower part, it will flip over to SPX, but 3,800. Yeah, well, maybe that's a sign of a top. Girl, I don't know. Or resistance anyway, that I'm thinking anyway, if this pokes higher, even though it's at new all-time highs, a trigger for me would be like a breakout failure. So you're saying like you think it's going to get stuck there because that's the open interest and it's going to flatline and we just may as well just go home right now? I don't know. Um, we'll see. So the top of this bar right there, these bars are the 3780-ish, which we would say, okay, that's your minor support area, which really, there's nothing really there. Inside that bar, 3775, and there's really nothing here. But anyway, for a spread, I would think this is safe down here. Just going by those numbers. The overnight data, but 3750 to 40. You got this low in here, some support, and I think that's a safe area, you know, up in there and down below there. So, which in reality makes me think that the market will get caught in between this area. And you're saying 3,800 has the big open interest, which could, you know, peg it. I'm going to use the word peg. Getting it could whip back and forth and end up in that area. It doesn't mean it's got to stay there all day. So we'll see how it unfolds. We've got this big red bar ignored now. Um, got to break out to new all-time highs in an uptrend. So it better hell not come back down in next week, or you got a short-term top in place. We'll see how that unfolds. Just taking a peek at internals here. Sentiment up at this upper level. 0.80 for you that aren't aware, this is your static level, 0.80. Or, just going back decades above there is bearish sentiment. And the sentiment has just been so overly skewed to the call side. And you could say, well, it's been going up in that work, but it's been going up so slow. I guess if you bought options far enough out, you're making money, but the time decay just just the slow plodding move. It's one of the first things I learned about options many years ago. It's like, how the hell could I have been right and lose money? Well, because if it doesn't move fast enough and the time decay, you lose money. So, you know, options are great, but like any other instrument, there's things you need to know because, they're just not a no-brainer. When they pick up speed like this, the momentum, well, then that's a nice thing. Breath still is garbage, because the way things have moved, and there's a lot of things that we know really not moving, which were big movers before. FANG stocks, for example. So pretty selective as to what's moving. But anyway, we'll see how things unfold as the month goes on. Um, that you know what, McGraw and everybody, the way this market has grinded, right, is something that we don't like because it's erratic. Um, where it looks like it's going to take off and it comes in again. And if you're playing relatively tight, that just takes you out of a trade and then it goes back up again. And, now it looks like it's going to go and big down move. And, if too tight, it takes you out again. And, this was the holiday time, but, it's kind of crazy price action. But one of the positives, if you will, is that unless some news comes out that really shakes this market, this type of movement has created all of these pivot lows. So even though we could get some kind of a down move, which is going to happen at some point, it's unlikely that you're going to get some kind of a market collapse. Um, Now, that being said, look, if we did get some kind of giant red bar that cut through stuff, that's a giant message that the supply that came into the markets at that time was huge, and the demand just shriveled up, and nobody wanted anything to do with it. But that typically revolves around some kind of news item that shakes everybody's confidence. But under normal trading conditions, when we see all of these pivot lows below, it's going to be very difficult to get this market to crack to the downside in a big way, because once it starts to pull back, and this bar at the close of today, I have this line, is going to, software is going to mark that as a pivot low. So while this pullback right here, the depth of here to here, let's just assume whatever happens today is a high point, and it pulls back. Well, our factory work says, well, that's a pivot. That's possibly a pivot. If you get a red bar on the other side of it, we don't know if it'll pivot or turn back up, of course. But as a high point, a new all-time high point of that bar, the deeper it retraces down here, obviously the higher time frame starts to take on a bearish look. So, this move here, which eventually reversed back up again, turned a red bar into a bottoming tail bar. So now, with that being said, the low of that bottoming tail bar becomes a critically important point within the trend, even though it's not a pivot. And so if it continues to go higher, great. It's a kind of a correction bar. It's kind of weird. I said this price action historically is not normal. So, but the events are not normal. But this type of consolidation is bullish, and then it's not supposed to, have some kind of crazy price action like that. But hey, when it hit the support, it flipped right back up again. So the low of that bar becomes a very important line in the sand around 3,700, and it should not retrace. So as we look at, this bar, same like we look at a wide range bar, say, well, it should stay in the upper half. And ideally we could say, well, stay in within the body, give or take. If it goes under the opening price, it comes back up, and so on. So look, it's real easy to just look at where things shouldn't go. First thing to do is say, is the trend up or down or sideways? What is it in multiple time frames? So you could have an uptrend in a daily and a downtrend on a weekly. So we're here, we've got uptrend, everything's in an uptrend at new all-time highs, which says, hey, things should keep going higher. If it comes down under here, well, then there's another support level, then there's another support level. So at this moment, it says it should continue the minimum to grind higher until it would break some support level. Well, we'll see when that happens. All right. NQ's up here close to 80. Was hit the top there yesterday, and now it's up here a little bit of above. This is moving up in a very controlled manner. You can see the size of the ranges. They're about equal, and that communicates certainty within the trend at this moment, even though it's at a big whole number of 13,000. Uh, when we see wide whippy ranges like this, that just means everybody's, you know, on edge or whatever, then uncertainty. When it moves like this, we view that as the majority are in agreement about what's happening, and it's just plotting its way higher, it's grinding. Got the same bottoming tail bar on the weekly, so that's your line in the sand, and we just drag that up there when it needs to stay, in the upper half of the green bar. Don't go back all the way back down here, or our bias begins to change. I am make new all-time highs, dead coma-like trading, with little hiccups and craziness at certain moments, but new all-time highs. Yesterday, the momentum slowed down. Right? We got a little tail on the top. We got a narrow range body. See where today ends up. And same story. Pivots, lots of pivots. So as far as the Dow goes, kind of look where the pivots are clustered, give or take. Not. I'm down here. This is what we call objective black and white analysis without all the kind of hocus pocus tools that lead to confusion, and simple look to the left. It couldn't get its head above here. It did. Ideally, it stays above there. The deeper it comes down into here, the more it's an issue. It breaks below here. We all know the story. Awesome, McGraw. McGraw saying he's got the same levels marked. He's been following what we do in here. And look, what's the story about fishing? Give a man a fish, he eats. You teach a man to fish, and he's whatever. That's the life. So there's something goes like that. But that's what we do, right? And that takes time because, look, no matter where you go, whether it's Master Trader or one of the other not so great places, um, you got to go there with some skepticism. And, that's intelligence to say, well, these guys got, some pretty good marketing stuff going on here. It sounds good, but then you get there and you find out it's a bunch of BS, right? Which mostly it revolves around this kind of stuff and MACDs and stochastics and optimal indicators and all that kind of stuff, right? So, but when you come to Master Trader and you say, yeah, this stuff is so simple. Can this really be too good to be true? Look to the left. This guy, like, yeah, watch it for a few months and you see how it works. All right, let's continue. All right. This thing just been a monster, right? When it came out of the November little corrective action there, marching its way up, new all-time highs. Where's it going to stop? Who the hell knows? I don't. But I've got a wide range bar here after a consolidation. So it's not an igniting type of a bar like this very nice bullish 180 reversal that got going here. It's not an ending wide range bar because it had 3 months or 3 weeks of consolidation, but it better not go back under the low of that bar. But we all know something's wrong because this all says that we got nothing to worry about. It's going to keep going up by the pullbacks. Bonds broke down. And I told you for well over a month that that is what was needed for this market. From the bullish point of view, and we just waited and waited and waited, and it could have popped back up, which would have been bearish. But now that this is probed back to the downside, it means that interest rates are going up. And while that'll eventually become a concern, because at some point, we'll say at what point do interest rates move up high enough that the attraction for secure income, right, through bonds make equities, the risk there too much. And this is too attractive to ignore. Now, it's still low, so it can go up significantly relative to historical levels. But for the moment, this is what we want to see. We want to see this pushing up because, as I showed you yesterday, what we want to see is these yield curves expand. And that kind of puts a floor under things. It doesn't stop market corrections, right? At some point, markets will correct, but this long-term information is what, guides us to say, hey, at some point, even if there's a 10% correction, the buyers are going to come back in again because of that liquidity. And we know that this government and the way it's going now, they're just on crack for liquidity. And so at some point it's going to come home, to roost. And you can be assured of that. Oil's going up. There's a need for crude oil. Fantastic. Makes me think, the way solar is going up and these electric things, eventually who's going to need crude oil? That might be a decade or so away, but plastics, solar, electric. Well, this makes sense. Gold, it hit resistance. When I hit up here earlier in the week, someone said, should we buy gold here? I said, nope, we do not buy at resistance. Let's just see that it consolidates here a little bit. And the big win in this trade is going to be some consolidation here. If it works out and then comes up above this level, we're going to have a big move. Of course, this has got to hold up here and not go all the way back down. Silver, and it's been outperforming. It's just pulling back here. It's kind of erratic, but and the fly in the ointment that we had for a while or so has been alleviated or neutralized. This crack on the transports and rolling over and this retracement back up again, it's at resistance, but this fly in the ointment has been neutralized. So right now, everything looks good, and we'll see how things unfold with this new administration going forward. We have a lot of skepticism about all the things that they said, but we'll see what happens in the coming weeks. Yours, Dan.
All right, thanks. Good morning. Let's just going through our opens here. Here's one more adjustment. Yeah, I posted XPEV, the EV sector. We're in a couple of them, but XPEV looks great today. We're in LI, we're in Aurora, we're in whatever the third one was. Let me just adjust this real quick. And Janet, I give Janet credit. She's the one that brought our attention to adding exposure yesterday. All right, all our opens are fine. As I do, that's actually the first thing I do in the morning. I check the futures and then I check our opens, see if there's any gifts or problems. And I mean, good thing is we have 0 problems today. Everything is on the good side. Boeing, we have a call spread that expires today, the 220s. Boeing they agreed to pay a $2.5 billion fine over the 737 Max stuff. So we have our alarms in, and that should expire at full profit. Uber I saw was down in a strong market. That was a beautiful close too. So that's a shock pattern. It's on support, so there's nothing to do. We do have a call spread on Lyft for next week. That's our only bearish position. Otherwise, we have 100% bullish stock and option trades. So even though I scratch my head at the strength every single day, I still am able to follow the rules, which is still bullish. GOEV, here's a nice little gapper. You had this gap reversal, went sideways for a couple days, and it's gapping over it with a price void. So that looks great. Let me put that in the window. It's a little whippy pre-market. Look at XPEV. Greg, I came so close to saying go ahead and buy this pre-market because I like the gap, like the gap on the daily, and I use pre-market data in my decision making to enter a gap trade in the opening few minutes. Most gap plays, most of them for me, they set up in the first hour. So this was a range expansion bar, a bullish 1, 2, 3, 4, and broke out. That's beautiful. Now I know there's resistance here, so I wouldn't have bought it, for a day trade, whatever. But we're entering it as a swing. YouTube's asking about Uber. I just answered it. Thomas, I just went over Uber and Lyft. Uber it closed incredibly well, but has a bearish gap, so I'm doing nothing with it now. Pins, CYTK. Pins. I don't like the daily at all. You got too many football players to the left, but this is a very controlled bullish 15-minute chart. You know how in the green room, I always like saying, hey, here's a chart. What in 2 seconds or less, 2 seconds or less, what's the most bullish setup that you see? And my eye went right here, Thomas, right there. Does anyone, well, this actually was not a bad one right here, but you got resistance and it was the end of the market. But that was a beautiful entry yesterday right there. Jafar, it's not a 1, 2, 3. I don't want to get into that right now, but we can talk about it later. Here, HIG. We're in HIG. HIG is a 1, 2, 3. It's a wide range bar with an inside bar in the upper third. That is a 1, 2, 3. Marble, yeah, definitely. Now, yesterday was the something bar that closed strong. I got XPEV on my other computer, so I'm going to put Marble here. Yeah, Marble looks fantastic. Looks great. And it's not gapping up too much. It's gapping up 82 cents. It's a bullish pre-market. It's at all-time highs. It looks fantastic. So Marble and XPEV are what I call tier ones. They're in the batter's box. As long as they don't do anything stupid in the first 5, 10, 15 minutes, they're ready to go. This GOEV, it's whipping around a little bit more with a less bullish daily. So that I wouldn't call that one tier one quite yet. Yeah, I got MU in here. Yeah, MU, it's gapping to all-time highs. I don't know what to do with that. McGraw, I would much rather trade Marble and XPath based on the technicals. Wow, this thing took off yesterday and it's taken off again right now. And Nor Birch asking about Golf Tango. It's gapping up. Yeah, so it's gapping up to the upper part of the range. And it's a bullish pre-market. So, and there's a price void. So I would say just because it's at the top of the range, I would say 30-minute high would be okay. Will be good for scalping. I did read that. You have to read all the words, Dan. Well, I'm just telling you, I read that one. All right. STM. STM for Michael, 4114. First of all, it's a ADR, the way it gaps all over the place. I guess it's, you got this unfilled gap's going to be resistance. Again, compare the Marvel and XPEV to this, and the other ones are superior because of the daily setup. Roku. Roku's been on a tear the last 2 days. A beautiful 15-minute chart, beautiful close. This is what we call an end of day base. So that's very strong. It's getting extended. It's gapping up here to all-time highs, so I wouldn't be rushing into it, but see how it sets up. Michael, I think you mean LRCX. It's up 4 bars, but again, the 15-minute chart is not extended. So, you just got to now say, all right, how aggressive do I want to enter this thing? I don't do anything in 5 minutes. So maybe 5-minute high if the market is in a good mood and the sector's in a good mood. I have Saber here. My alarm went off. This was a watch from yesterday, maybe 30-minute high. We'll come back to it. Hope Long for Diego. No, Monica. When something, this was a breakout failure, and it came slamming down, slamming down. Look at the size of these bars, slicing through support like butter. So you're swimming upstream on any bounce. The power on the daily, weekly, monthly is down. So if you're wanting to go long, you need a very bullish reversal setup. And reversal on what time frame? Fairly is not the daily. That's still ugly. It gave up the small pre-market gap. You got no price void. I would say I got a big old zero interest in that right now. Marvel here. Marvel looks good. I cannot believe the strength in this Q's. On today's Friday, so on Tuesday, when it closed like that, we were saying, I don't know, maybe the stupid thing will negate the red bar, and that's exactly what it just did. That was a 1-day bear market in the Q's. What happened to the story of, okay, Dems are in, and now they're going to destroy technology companies? Well, that's not what the chart says right now. Things were perking yesterday. Oh, here, look at this Tesla. Hey, this could be a 0 DTE trade. When things go up vertical, they will come down. Do you really think? I mean, look how far from the 20. This would be a great one. I'll bet we could even go to the $10 over. I'll bet we can do 870s. Just because the calls are jacked because of the very bullish sentiment.